common question from our medical clients is, what's my practice worth? The simple answer is, it's worth what someone will pay for it. The potential buyer for your practice will balance their expected future income from buying the practice against the anticipated risks of running the business and then determine what that's worth to them. When valuing your practice, the first thing a valuer will consider is the income stream that's coming from the business. The income stream is what an investor is purchasing. This is what they're buying when they buy your business. When considering the future income stream, we start with the business's profit and loss results, the overall position of the business year upon year, and then normalise these numbers. The normalisation process involves a review of each revenue and expense item in the profit and loss statement to consider whether or not the amounts are reasonable. If there are any abnormal items or there is amounts that might be specific to you as the current owner or any other items missing from the calculation, these will be adjusted in the profit and loss to come to a normalised profit. The idea of this process is to determine the expected and ongoing income which the buyer could expect from running the business. The final amount calculated is what we call the future maintainable earnings of the practice. The next step in the process is to calculate a risk factor associated with your practice. This process is a lot more subjective and relies considerably on the experience of the valuer and their industry knowledge. Factors which can influence the risks associated with your practice include location. Are you co-located with other health practitioners? Are you in a shopping centre or are you in a less prominent position? Do you have a stable base of doctors in your practice or is there a high turnover of doctors? Are you a mixed billing practice or a bulk billing practice? When was the last time you had a fit out? How old is your fit out? How old are your systems and your computers? How many consulting rooms does the practice have? Are there more than 5 FTE doctors? Is the practice accredited? Does the practice have a short or long-term lease in running the premises? All of these factors will impact on the risk of running that business and the risk of that income stream of the business continuing. Once the valuer has considered the risks specific to your practice, they will then consider the general economy and other industry-specific risks. This will enable them to come up with an overall associated risk rate which is particular to your practice. The assessed risk is then used to determine a capitalisation rate, commonly known as a multiple. The final value is calculated by applying this capitalisation rate to the business's future maintainable earnings. For example, if your future maintainable earnings is $200,000 a year and you have a multiple of say 3.5 times, the practice would be worth $700,000, being 3.5 times $200,000. In other words, this equates to an investor looking for a 28.5% return on their money if they were going to invest in this practice and to justify the risks of that investment. If the practice had more risks associated with it, the multiple would be less. For example, if the multiple was 2.5 times, the practice would only be worth $500,000, 2.5 times $200,000. Because of the higher risks associated with the business, an investor would now be looking for a 40% return on their money to compensate them for these risks. When looking to improve the value of the practice, both the profit level and the risk multiple need to be looked at, and they both need to be considered to increase the value of your business. William Buck has extensive experience working with medical practices and practitioners, helping them to understand the value of practices. We valued practices for finance, sales, acquisition of businesses, and for divorce, and for many other reasons. If you're interested in finding out more about the value of your practices, contact us at the details below, and we can give you a better understanding of your practice's value.